Hey guys, Eric here with Primary Residential Mortgage. Today I want to talk about what is a short sale. Now, you probably heard the word, or you may even know someone that's already completed a short sale, but you may be wondering what exactly that is and what that means. So today we're going to talk about it. Let's start with defining a short sale. Basically, a short sale is, by definition, a sale of real estate in which the sale proceeds fall short of the balance owed on the property's loan. So basically, bottom line, you're selling a house for less than what you owe. And number one, you might be asking, why would you do that as a seller? And then why would a bank agree to that as a bank? So first off, as a seller, a short sale is better from a credit standpoint than the alternative, which may be a actual foreclosure. From a bank standpoint, a short sale is oftentimes cheaper for them in the long run and ultimately results in less of a loss than a foreclosure would. But you understand that with a short sale, there are some additional ramifications that come into play. Number one, in most cases, you're going to have issues with your credit. From the current loan guidelines, when you're dealing with a short sale on your record, you're going to be looking at typically a minimum of 2 years before you're going to be able to buy a house that could be as many as 4 or as potentially as many as 7. And again, that depends on the specific circumstances surrounding the short sale. The other thing you need to be aware of is that you still may be on the hook for the deficient balance on the loan. So let's say, for example, you owe $200,000 and you sell your house for $150,000. The bank agrees to it, you agree to it, the sale goes through. Well, there's still $50,000 owed on that loan. Now, so what's going to happen is the lender or the bank is going to send you actually a 1099-C, and that's a document that you're going to receive that says that they forgave debt, and then you're responsible for paying tax on that debt. Well, currently there's the Mortgage Forgiveness, or actually it's technically called the Mortgage Forgiveness Debt Relief Act and Debt Consolidation that's in place. You can go on to irs.gov and just Google Mortgage Forgiveness Debt Relief Act, and it'll give you all the details on it. But basically, if you did a short sale in between 2007 and up through actually December 31st of 2012, you may be eligible to not have to pay tax on that deficient balance. Now, there's some caveats with that and some specific guidelines that apply. So I definitely encourage you to consult the advice of a tax accountant or a CPA or certainly a tax professional if you are considering a short sale and or if you've already completed one, because again, there are some provisions in there that would allow you to have that exemption and be exempt for paying tax on it, and there's others provisions that do not allow that. So I encourage you to check with your CPA or tax accountant on that. But again, keep in mind, short sales, bottom line, you're agreeing to sell it for less than what you owe. The bank's agreeing to that as well. The basic ramifications are you're not going to be able to buy a house right away. You're probably looking at anywhere from 2 to 7 years, again, depending on the circumstances. And then the other thing you got to watch out for is you could be faced with some additional tax obligations. And again, that could be serious financial consequences. What we're talking about here is, to give you an example, let's say you wrote off, to keep it simple, $100,000 in short. So you sold your house for $150,000 and you owed $250,000 on it. So there's $100,000 that the bank's not getting their money. If you're not eligible for that exemption, and again, seek the advice of your tax accountant or CPA, you could be required to claim that $100,000 as income on your taxes for that year. Well, $100,000 in additional income would certainly create a tax burden. For example, using simple math, if you're in a 25% tax bracket, you're talking about $25,000 in potential taxes owed on that $100,000 debt that may or may not be exempt. So you're considering a short sale, or if you completed a short sale, definitely seek the advice of a tax accountant before making that decision, or if you have, definitely take a look at it. If you have any questions for me regarding short sales, what it may mean as far as financing and buying a new home, please give me a call. Of course, if you know anyone out there that's looking to buy, sell, or refinance, please keep me in mind. Again, all my business is done by referral. So again, I appreciate any referrals you send my way, and I'm certainly going to take care of them. Thank you very much. and enjoy your day.